Hello, and welcome back to Finance Healthy Luxuries. Today, we're diving into one of the most sought-after financial goals, retiring with guaranteed income for life. Imagine a retirement where you're not just surviving, but truly living, experiencing the luxuries you've always dreamed of. It's not just a dream, it's a possibility. And we're here to show you how. In this enlightening journey, we'll unravel the mystery of 8 passive income streams that can be your golden staircase to a retirement of financial health and ultimate luxury. From the power of dividend stocks, to the stability of real estate investments, the security of annuities, to the diversification offered by bonds and fixed income investments. We'll delve into the benefits of dividend ETFs, the government-backed safety net of Social Security, the continuous flow of passive business income, and the modern appeal of peer-to-peer lending. Retirement should be a time of relaxation and enjoyment, not worry and uncertainty. So let's embark on this journey together to a future of financial freedom and luxury. Our first income source is dividend stocks. Now you might be wondering, what are dividend stocks? They are shares in a company that pays out a portion of its profits to shareholders, typically on a regular basis. It's a bit like having a tree that grows apples. You own the tree, that's your stock, and every so often it produces apples. Those are your dividends. The beauty of this is that you get to enjoy the apples without harming the tree. In financial terms, this means you're earning income without selling off your investment. Over time, as the company grows and profits, you may see more apples, or in our case, larger dividends. So imagine owning shares in multiple apple trees, all dropping their fruits into your basket. That's the power of dividend stocks. Investing in dividend-paying companies can provide you with regular income while still allowing your investments to grow, while real estate can be a powerful source of passive income. When we talk about real estate investments, we're not just talking about buying a house or an apartment, we're talking about strategic investments that can generate a steady stream of income with minimal effort on your part. Consider rental properties, for instance. Once you've purchased a property and found reliable tenants, you can enjoy a consistent cash flow each month. It's like having a business that runs itself. Then there's the option of real estate investment trusts, or REITs. These are companies that own, operate, or finance income-generating real estate. You can invest in a REIT much like you would a stock, and in return, you receive a share of the income produced by the real estate investment. It's a way to get involved in real estate without having to buy or manage properties yourself. Investing in real estate can offer you consistent cash flow, making it a viable strategy for securing a financially healthy retirement. Annuities are designed for guaranteed income. Think of them as a financial cushion that promises to pay you a specific amount at regular intervals. You make an initial investment or a series of payments to an insurance company. In return, they pay you back over a specified period. This could be a set number of years or even for the rest of your life. What sets annuities apart is their ability to provide a steady stream of income during retirement. You've got the choice of immediate annuities that start payments right away, or deferred annuities that begin payments at a future date. It's like having a personal pension plan that can supplement your other retirement income. But remember, annuities come with their own set of considerations. They can be complex and may include fees or penalties for early withdrawal. So it's crucial to understand the terms before you dive in. Annuities can be a valuable addition to your retirement portfolio. Diversifying with bonds and fixed income investments can provide stability in your retirement portfolio. Let's break it down. Bonds, whether they are government or corporate, are essentially loans you provide, which are paid back with interest over a predetermined period. This makes them a predictable and reliable source of income. On the other hand, fixed income investments are those that provide a return on a fixed schedule. These can include certificates of deposit, or CDs, and money market funds, among others. Their primary advantage is the certainty they offer, as you know exactly when and how much you will receive. Incorporating a balanced mix of these into your portfolio can mitigate risks and provide a steady income stream. Remember, the goal is not to chase the highest returns, but to create a diversified, stable income that supports your retirement lifestyle. Bonds and fixed income investments can provide stability in your retirement portfolio. Now let's keep exploring more ways to secure your retirement income. Discover how Dividend exchange, traded funds, or ETFs offer diversification and consistent income while being low-maintenance investments. Dividend ETFs are designed to track an index of dividend-paying companies. This means that instead of picking and choosing individual stocks, you're investing in a broad basket of companies that pay dividends. This basket approach provides investors with the benefit of diversification, reducing the risk associated with investing in individual companies. Moreover, ETFs are known for their liquidity and flexibility, allowing you to buy or sell shares throughout the trading day, just like individual stocks. But here's the beauty of dividend ETFs. They typically distribute the dividends they receive from their underlying stocks to the ETF shareholders. This way, you can enjoy a steady stream of income without the need to constantly monitor and manage your investment. Dividend ETFs offer diversification and consistent income while being low-maintenance investments. Social Security is a government-backed income source. It's a cornerstone in the financial foundation of many retirees, and understanding when and how to claim your benefits is key to maximizing this income stream. Social Security benefits are calculated based on your 35 highest earning years, so it's important to consider this in your retirement planning. Deciding when to start claiming your benefits is a personal decision. While you can begin as early as 62, waiting until your full retirement age, which varies depending on the year you were born, means larger monthly checks. And if you can afford to wait until you're 70, you'll receive even more. Each year you delay, your benefits increase by a certain percentage. This is known as delayed retirement credits. So strategically timing when you claim can significantly boost your lifetime income from Social Security. Claiming your Social Security benefits at the right time can ensure maximum financial security. Entrepreneurship doesn't have to end in retirement. Indeed, it can be a beginning of a new chapter. Imagine owning a business that operates successfully with minimal involvement on your part. This is the essence of passive business income. It's all about setting up a business model that can run efficiently, even when you're not actively managing it. This could be a blog that earns advertising revenue, an online store that sells digital products, or a more traditional business that's managed by a capable team. Remember, the key is to create something valuable that can generate revenue independently. It might take time and effort to set up, but once it's running smoothly, it can provide a steady stream of income. This way, your entrepreneurial spirit can continue to thrive, even in your golden years. So don't discount the idea of starting a business in retirement. Passive business income can continue to provide for you after retirement. Peer-to-peer lending platforms can be a source of steady returns. This innovative approach to lending and borrowing is reshaping the financial landscape, offering an alternative to traditional banking. Simply put, peer-to-peer lending, or P2P lending, is a system where individuals can directly lend to other individuals or small businesses without the need for an intermediary like a bank. The process is simple. On a P2P platform, borrowers list their requests and lenders, potentially like yourself, choose who they want to lend to based on the risk and return profiles. This direct connection between lenders and borrowers often leads to competitive interest rates. Plus, it diversifies your income stream, adding another layer of financial security to your retirement portfolio. Of course, like any investment, P2P lending carries risks. However, with careful consideration, it can become a profitable part of your passive income strategy. Peer-to-peer lending platforms can be a source of steady returns. In conclusion, retiring with guaranteed income for life is within your reach. We've journeyed through the landscape of passive income, shedding light on 8 diverse and lucrative income sources. From the stability of dividend stocks and real estate investments to the promise of annuities and bonds, each avenue holds the potential to fortify your financial future. We've also delved into the benefits of dividend ETFs, the security of Social Security benefits, the ongoing rewards of passive business income, and the modern approach to income generation through peer-to-peer lending. Remember, the key to a luxuriously comfortable retirement lies in diversification. By spreading your investments across multiple streams, You reduce risk and increase your chances of consistent income. Harnessing the power of passive income allows you to step into a worry-free retirement, one where financial health is a given, not a goal. So embark on this journey and remember, a secure future awaits. By diversifying your income sources and harnessing the power of passive income, you can create a retirement that's not just financially healthy, but luxuriously comfortable.